Welcome to Trash Trades, the show where we absolutely get demolished by the market. Is the market run by an algorithm known as the interbank price delivery algorithm? Or is it run by simple buyer and selling pressure? We don't fucking know. We trash traders. And as we try and we develop and get better at trading, our wins grow and our losses do too. Oh my God. He's going for a 2R, but right now he's adding to a loser. Welcome back to episode, was it 45?
Welcome back, guys. Episode 45, and I'm here too. We're in this episode here, and I got a fucking shit trade for you guys today. Yeah, man. Let's go for it.
The trade is so bad that simply before I've even seen the description of it, I can just tell if that low swept a major liquidity or PD area, bro is cooked.
I ain't making no profits on this trade, guys.
That sure is a lot of displacement to be shorting against. Oh, dear God. It could be right, but honestly, it's really about bias. Welcome to Welcome to Trash Trades. God, that AI is pretty good at that, huh? Look at.
Oh yeah, that was AI Wilson. We got a special AI guest called Wilson. I don't know, he recreates our voices. That was definitely not weird, creepy VJ. It was nice Wilson. And we got a fucking good ass motherfucking trade. No props to VJ because that voice was shit. It was Wilson, and yeah.
I felt like the baby AI that you try to put out there.
Oh man.
Yeah. Oh man. It sort of got ran
down. I could do this video with this voice, man. Honestly, this whole fucking episode. Let's go.
Oh God.
That wasn't me
Please,
either. That wasn't me. That was the Wilson AI. We got some AI tools in this motherfucker, right?
That's fair.
So we in this bitch.
I was going to say, where are we going to go with the Wilson thing? I mean, it doesn't matter. Okay. All right, let's check this trash trade out. You ready?
Let's go for it.
All right, roll the intro.
Order filled.
Oh, stop it right now. This was a trade taken on options. I had this trade or I had a paper trade, and this one was trashier. This one had more of the juice in the oomph to learn from. It's a shitty. Listen, we'll hop in. But if you guys want to trade some futures like VJ, trading prop firms, or you want to trade like get funded. Make these companies fund your account, give you 20, 30K, 50K to trade futures. There's a link in our bio. You can trade some futures. Pass an evaluation account. You get a fucking personal account, and then you can start withdrawing from that account in the form of checks. It's good.
It's with TOPSTEP, which is like one of the top companies out there for sure. It's the main company I trade with. The other company, I mean, it's some European regulation stuff. So
some bullshit.
I'm pretty much just stuck with TOPSTEP, and they're fantastic. I even have funded accounts on another firm, and I don't even trade them per se because I prefer TOPSTEP's rule. Pretty legit.
Yeah.
Company, especially with all the weird stuff that's going on. They've been legit, so I would highly recommend them, and that's why we partnered with them, and we got like a little. Was it like a 20% off?
So, and you know what, guys? You know how we're fucking in this shit. We applied. TOPSTEP be watching. Hello, TOPSTEP, because they be watching our episodes. Anyway, in the link in the bio, you guys get 20% off, and you help support us. It's a win-win. If you guys ever want to trade prop firms, you support the show, and you fucking get a little bit of a discount. And then we in this bitch. And then you know what? You can fucking send us your trash trades. And maybe they'll give a little debut on the episode. We don't know. We got a lot of behind-the-scenes things going on. But fuck it, man. We're in this bitch.
These are the type... Oh, I'm sorry. Go ahead. I was about to pick.
Oh, that's it. Literally. I was about to finish.
These are the type of schmeckles that we're looking for. Listen.
Schmeckles.
Yeah, we're trash traders. We're getting it together. Things are getting better. We just keep it and maintaining good rules. And, the results are getting much more consistent and whatnot. However, in the meantime, the Schmeckles, accept the cookie, motherfuckers. When you click the link.
Oh, yeah. If you motherfuckers don't click the accept cookies on their website,
we're cooked.
Burning. If you guys want to see us burn, you don't accept the cookies. Who wants to do that? Are we lovable? Are we nice? Are we cute? Are we cuddly? Do you want to hug us in the silky smooth bed that we always talk about? Absolutely, you have to click that motherfucking accept cookies. And yeah, we're kind of selling out. You guys support us. We get fucking no money from this bullshit. So win-win. Check it out. Anyway, to this trash trade. This is a really interesting trash trade because this was an options trade with real money. And I sort of had a pretty overall bias for the day. I'm pretty sure I was long bias for the day until we saw this movement up to invalidate the sweep. So we sort of swept above this high and fell down. So at this stage I would have been short. Now we started invalidating this. I was thinking long, and then I think I got chopped up in here once, and then we got this sort of price, this chopping down price, which changed my bias back to short. And I was honestly looking for maybe a fair value gap draw down here, something more into discount. I wanted lower prices into these imbalances, and I sort of took a lousy entry. As you guys know me, I'm a fucker, and I like to enter at the 618 Fibonacci retracement. So normally I wait for a retracement into a fair value gap at close to the 618 or at the 618, and I'll enter there, enter a short or whatever it is. As you guys can clearly see, unless you guys need glasses like VJ and you guys need to go to the fucking eye surgeon, I did not enter on the 618. I did some lousy entry. I sort of took this fair value gap here. It sort of rejected off this candle. I wanted a bit more of a pullback before I actually went short, seeking these lows and then into that eventual fair value gap. So I'm gonna play a couple more candles. You can sort of see I was short bias. I wanted to see that fair value gap, and I took a lousy entry. And I'm gonna sort of go bit by bit on this trade and sort of explain it as the candles went. And first of all, I thought this entry was quite good, to be honest. I was in green for seconds, but I was eventually in red, and I moved my stop up. Originally, my stop was down here. I moved it up and moved it up on my actual, what my entry was supposed to be, which is a 618. But because I took this lousy entry, I decided to move my stop up. I think my stop was here eventually, and you can see this risk reward was already ridiculous. I shouldn't have permitted myself to move the stop up, but I did. A couple candles later, we had a nice move. So if I were technically in that 618 entry, bought there, I would be green. Now that doesn't mean that I would specifically take profits or whatever, but I would have been green and I would have seen a little bit more of a move towards my direction. In this case, with this entry, I did not. I was absolutely red. I was break even here for a little bit, but eventually I sort of got chopped up. We sort of saw this high again, and then we continued on up. And I just want to mention that when you place a sort of trade entry, for example, my trading strategy, my trading model is a 618 entry. So I'd sort of enter at the 618, expect a movement down, and then I'd take profits at a low, or in this case, a big 5-minute fair value gap. And when your entry starts to, become invalid, for example, we start trading above your initial entry. This is a good sign that the market is breaking structure. We are seeing higher highs, higher lows, higher highs, higher lows, higher highs. So we're in an uptrend. If you start to see this chopping upwards. So in these circumstances, yes, this is the 1 minute time frame, the lower time frame sort of trade. I want to try catch an entry, and then the structure start to break down. I want to see a swift movement down, and in this case, I didn't. and I saw a invalidation of my entry here, and Jesus Christ, it started moving up, and this was more of an indication for me to move down my stop or at least secure my risk a little bit more. But I didn't. I kept this stop above the 786. I sort of keep it there when I have the lousy entries. If you guys see my stop at the 786, it's not very good. I normally move down my stop. So you kind of get the gist of what I was aiming at, and how my mistakes sort of led me to take this really bad entry. Because I was, to be honest, I was short biased. I wanted to see this low, and I got so again sort of fixated with this take profit that I sort of decided to be satisfied with the bad entries, the super micro time frame entries. And this is what happened. I sort of decided to move my stop up and my stop up and my stop up against my actual entry, my supposed entry, and then etc. etc. So I think a couple candles later, yes, I got stopped out with this candle here. So I was sort of in this trade for around 30 minutes ish. And this is not a good sign. I should see a quick movement down. And for the people that don't know, I'm just going to sort of recap on my model. I am a distribution trader. So I would take a range and then a trade into the discount or the OTE of that range, and then a distribution downwards very fast. So in this case, I would seek a 618 entry, like you can see here, and then I would place a position, target the low, and then have a very small stop loss. And I want to see more from a higher time frame, lower low and lower highs being formed, to higher highs and higher lows being formed, to back to lower lows and lower highs being formed in this form. And in this case, I think it was quite clear that once we got that movement back into the 618 entry, aka right here, in fact, I'll mark it out for you guys, that was sort of an indication that the market is not structured yet for the downside. And again, it's something that you sort of have to be aware in the moment. You have to understand that I am looking for lower highs and lower lows in my trade. I will not settle for anything doing the opposite. And in this case, when we kept breaking higher and then consolidating, kept breaking higher, consolidating, this is an indication that the actual order flow is not done and is not going in your direction. And I think there was a lot more reasons for this trade, but I'm going to throw the mic to the VJ analysis, which is hopefully going to sort of break down. And yeah, VJ, what do you think?
As people who enter on OTEs, it's very easy for us to sort of get it wrong and attempt to enter in an OTE, and really the price is going against us. Much of the strength of the OTE, if you're disciplined enough to wait for it, which I fuck up a lot lately, especially or the last couple of days, I feel like I've been fucking it up a little bit, is like you have to wait for it. That's where, like, wait for it to get hit, and then that's where your risk is like saved and taken.
Yeah.
Taken down a bit.
Absolutely.
Also, like, the main thing that I like to think of is like, what is the strength of like the real manipulation that's starting a potential distribution, right? And so like every move sort of has a sweep and then a move, and especially if you're on the higher time frame, at some point, even a retracement is going to be a market maker model on the lower time frame, and it'll have a sweep and then move up. And you sort of have to judge like what's the current order flow, what's the more important PD array or valid PD array now. Mm-hmm. And so I would look at the lowest low, not the one where the line is at, but the one that's lower than that. Yeah. And as you can see there on the time frame that we're looking at, like we started a break structure around there. I think there's a wick. Yeah. So there's a wick. We started a break structure, but no, maybe there's a fair value gap. I think there is one down there. And I would say, like, what time frame we're looking at? The 1 minute, right?
This is the one, yeah. Unfortunately.
Yeah. So like, scroll out to the 15 or the hour. Okay. So on the 15, there's a fair value gap right there that we tap. No.
Mm-hmm.
Okay. Go to the hour. Same fair value gap. Go to the 4. Now, by the way, on the hour, is this fair value gap in OTE? Okay, so that the 4 looking like a sweep, that's a little sus. But that happens sometimes on higher time frames because it moves up and then moves down. On the hour, it looks like it closed over. So yeah,
on the
take that hourly.
From the first low close candle to the high of this move, we were in that 618. So that higher time frame sort of bias should be leaning a little bit more upwards to these ideal pivot
potentially
points.
Yeah, and then look at the go from the swing low on the hour, and then we'll refine it on the 15. So take that lower low.
You're talking about this one, the same one?
Yeah.
Okay.
Yeah.
And then on the 15.
So we're in discount on the hour still, right?
Yes.
Or is it still the 618?
In here is discount. I sold in discount.
But I'm just saying, like,
this
that where it taps the fair value gap, it hits the 618 even on the hour, right?
Yes, exactly.
Okay, and then like if you zoom out a little bit, like you could, yeah, and then you see the low that's even lower than. Zoom out, zoom out. You can even go to the 4 hour. That low. Okay, so I'd be looking at that and be like, this is the thing that's powering this move up, this sweep, and then I'd put fibs on that. I would zoom out a little bit, and then I think there's a daily fair value gap and a 4 hour fair value gap, and then you see how we swept all that low resistance liquidity and those relatively equal lows before this move up.
Yes. So
why should we? And then and then we also inverse the 4. It's like, why would we anticipate after all of that bullish stuff, besides those wicks at that 4 hour high, right? But if you just are like, okay, we did all of that bullish stuff, maybe even look at the daily, right? And then you probably, if you drew a fair value gap on where we tapped there, I bet you we hit the CE of it, which is a consequent encroachment, guys, which is the halfway point, which you can sort of think of as like its own like PD array. Does it? Yeah, it hits it, right?
Right there, yeah.
So that's a lot of confluence. And then if you take that swing low on the daily up, it's in discount or maybe even OTE again. No, not there. Not there. The other low. In the daily range that we're looking at.
I'm sorry.
No, you're good. Are we in OTE there or nearly?
Yes, we hit
okay.
Right there.
So you see why it's like pretty risky to take shorts. You have all the higher time frames are pointing for long, so instead of hunting for shorts, should be hunting for long setups on the lower time frame. They'll go further, and they'll be more explosive. And then go back to the 1 minute where we said it hit the 15-minute fair value gap in discount, correct?
Yes.
And in OTE, right? And then what's it start doing there? Right. On the 1 minute, so 15-minute PD array. So we have a bullish bias on the higher time frame. Okay, based on the 4 hour, daily, hour, we just broke it down on where we were bullish, right? And then on the 1 minute, we've come and manipulated into a potential 15-minute PD array in OTE. Right, and as you can see, once we hit it, we make a minor break in structure and then truly displace, and then come back essentially to the order block that started that move.
This order block right here.
That one, or you could do that one or the propulsion blocks above it that are made right above it.
Damn.
And then you see how, and then it's breaking structure again on the 1 minute, continuing to give entries for longs. The entry for short has to be fast, has to be perfect, not really working. So play it out. Do we get close to the highs? Or was this too early as well? Okay.
We get a
That could
move
just be a
upwards.
retrace. Right, but that could just be a retrace right there back into OTE and then starts moving up again.
Then
Okay.
move
So you
down.
see that's pretty choppy, but moved up first though. So you see it, but it tested the OTE and tried.
Yes,
Took out
it
some
did.
highs, got to
There was
there.
still
Now
that
it's back
bounce on
into deeper.
OTE, which I think
Right,
is very important.
right. And so that's why it's like you had the short bias and you weren't necessarily incorrect, but every move must sort of end at some point. And so when you have a move like that and it's been going for a little bit, you didn't get close to, you know, a place where it makes sense. Like maybe in the beginning you took out some external range liquidity and this was the internal that it needed. And then it recontinues. And then so when I'm trading the best is when I'm discerning all of this to really think so. And sometimes, I'll be looking at price action and it won't be the most recent price action. I'll be looking at old stuff, even if it's 30 minutes old when we just recently hit a level like that and turned and I'm not paying it. I'm so in my bias, I'm not paying attention to why we might be moving this way. Because like what's ideal in those moves to OTE is a manipulation move rather than a slow grind move.
Yeah.
Like I heard from Tom Dante, like you prefer something to be rushing to your level and bounce than like grinding up. And if you really think about it, the reason the grinding up is because it's actually breaking structure and holding. When if it's rushing to your shit and then bounces off, that's just manipulation. OTEs are forms of like quick, like retracement manipulations. They're like turtle soups on a smaller time frame. They are quite difficult, but when you tie them in like this, you could notice you were trying to take an OTE short, failed. Almost at this point, you could be like, why did it fail?
Exactly.
And then realize that your bias is incorrect, and then re-wait for a sweep.
Yeah.
Re-wait for something to go, and then probably just wait on the higher time frame. Because here, this move up, it's a little shaky because I bet you on the higher time frame, it's not leaving real
Absolutely.
displacement fair value gap. So it already looks, it's going to play out, but it looks like it's going to get swept up a little.
See,
You know what I'm
I
saying?
honestly I think that this was more of a mistake on my end, for not There's a couple of things that I did wrong. Okay, yes, sure, I might have been technically right on that super higher time frame. I was not right on this OTE movement up. I should have seen that this 618, as you know, if you guys been watching us for a while, me and BJ were very OTE traders. So we look at these 618s from daily ranges, all time frame ranges, and we could sort of see, pivot points into the 618 and then a retracement from that level. So in this case, yes, there was a higher time frame 618 being tapped, which I did not notice. But I think it was more a staple on my mental ability. And we always say this in trash trades, which is patience is so extremely important. And as soon as you don't have patience and you submit to the whatever entries, like in this case, this right here, you start to lose more of those instinctions to protect yourself in the market. For example, I decided to enter in early, a really bad risk to reward, which is 1.21. This fair value gap right here was my actual entry. So what did I do? Instead of stopping out, I moved my stop up to the actual entry. And then now when it hits the actual entry and it was supposedly supposed to go in my direction and a movement down, we see this retracement up. And I feel like this retracement up is very dangerous if I didn't actually execute on my entry, because I don't have the instinctions to become aware and to protect my risk. And I'll explain that because I know it's a big thing. When I settle for the whatever entry, I no longer protect myself with this choppy movement upwards. I could have secured my risk. I could have saved a good amount of money by moving my stop to my initial 618 entry right here. But I didn't. And I feel like that was more of a staple on my lousy entry, that I was lousy during the whole trading process. So if you're lousy on just the entry, which I did in this case, I am lousy with my risk management. I'm lousy with my trade setup and my stop placement, and it sort of ties in with a lot of other traders on just deciding to settle for less. Trading should be very structural to the point where you see your strategy and you execute on your strategy. That should be it. There should be no emotions. There should be no chasing. There should be no FOMO. There should be no fear or anything like that. As soon as you let those emotions take a stance into your actual trading, you'll see these lousy entries. You'll see us, moving our stop up. You'll see the higher time frame bias not be correct. You'll see the chopping up and the opportunities to secure your risk, but you don't do it. I feel like that's more of the mentality that I had during this trade, which triumphs, I think I'm saying that shit right, over the fucking higher time frame bias. I think my mentality in this trade was wrong. For me to actually take this trade, Jesus, for me to actually take this trade in the first place. So I think it was, yes, the higher time frame bias, like VJ said, the initial bounce off the 618. But again, I didn't have the mental strength to actually protect myself before this trade even started, as you can see with this entry.
Yeah. So remember what I was saying? It's like with the OTE, and I need to be better at it. If we're gonna enter on them on the smaller ranges, we have to be like precise and enter on them. And your entry is a lot lower.
Yeah.
So like put another short position tool as if you did enter, there. And then where's your stop? Your stop would be at the high where it should be.
My stop would be
right?
at this high, and then this would be here.
Okay, so what do the numbers look like there?
So
first of all, is the stop actually quite a bit smaller than your other stop? Just on how big is the stop right there?
For a risk to reward, this stop is around the same amount of points, give or take. It's less points, but it's a higher risk to reward. So
the fact that it's less and it's a higher risk reward, it's not that it should be ignorable. First of all, if you entered correctly, like let's just say you have a limit, you just automatically boom, there it is. I don't wait for the confirmation. I just hit it. You can eat a little bit more of those losses if everything being equal. But it's not equal because the trade idea and quality based on the entry is much larger. So when then it works out for you, what is the RR there? It looks like at least 2-1.
This is exactly 2.
Right. So that sort of makes the point a little bit, I'm just like, if you're going to enter on the 618, you have to do what? You have to enter on the 618. Many of your trades lately, you will be triggered to enter on the 618 and then enter late. And then if you lose quite a bit more. And by the way, this is coming from someone who does this a lot. And I just realized, like, when it hits my level, I have to just blindly enter. It's not blindly. I already set it up. Like, okay, I want to be here. I could just leave a limit and just go. And so I'm going to start either doing that or just like marketing. I'm not going to market in late. Like, oh, they hit the thing. Boom, I'll go. And then if I lose, it's just less. Every time I wait, like I trade NQ, it moves too fast to fuck around like that. If I literally, like, what I've been doing is like I'll set it up and know where I'm going to enter and then go to the TOPSTEP X screen. And then I just watch there. And the second it hits, I can't let it hit on my trading view and then go there. I have to be anticipating it, sometimes already drawing just a little thing, be like, right there, I enter. Even today, I tried to do it, and I market entered right when it hit the fucking level, and it was still like 4 points off. Those are 4 points of cushion I could use. If I'm trading minis, that is $160 more of a loss. Pretty significant with the $2,000 drawdown. So automatically 10% or like 8% of the fucking thing. That's a lot.
Mm-hmm.
You know what I'm saying? So it's like the precision of some of the things that we require to enter, we have to enter precisely on.
Exactly.
There's many times I'll hit the 620 to 705, I see it wicking, and by the time I mark it in, it's like, oh shit, I'm at the 50%. It's like, what the fuck? I would already be able to trim and be fucking whatever if I really wanted to. You know what I'm saying? Or I could have a break-even thing that makes sense instead. It might come retrace to the 618, or even worse, go to the 786. But your entry is at the 50, and there it goes to 786, and then it might work, but you're just in like crazy drawdown and literally about to take twice to 3x the loss that you would take if you did it right. And that's I struggle with that sometimes too.
Exactly.
That's why I'm like, when it hits that level, you just enter, let it work. If the number looks good, take some. If not, whatever.
Yeah, and that's sort of a problem that I'm starting to have as well, which is I'm not acting on my model. You know, every trader should have their own strategy. If it's based off of patterns or SMC or ICT concepts or anything like that, you have to sort of backtest your strategy initially. You have to gain data. How often does your strategy execute? What's your win rate? And stuff like that. You should already bring those that sort of information towards the markets before you even place the trade. It should be very structural. Like I said the last time, you literally have to have your entry planned out, your stop loss planned out, and your take profits planned out before you actually place a trade. And I think as soon as you settle for less, as soon as you don't actually precisely take your entry and you decide to be lousy with the big stops and the, tiny take profits, that's when you start to become infested with this negative trading attitude where you don't protect your risk, and you don't move your stop, you are not rational, you're more emotionally controlled. You want to hold on to that position and, not admit your defeat and be stubborn. All those tendencies is just, it sort of rolls out as soon as you take that lousy entry. As soon as you're not executing on your strategies, those sort of tendencies tend to come afterwards. And I think that's such a key thing. Basically, the moral of the episode, is you have to execute on your strategy. Because if you don't do that and you don't execute precisely on your entry or as on your so-called entry, with limit orders or a market order or whatever it is, I experience, I'm not sure if it's 100%, but I experience these drastic trading tendencies, very negative trading tendencies. That is something that is a very negative habit that it'll take a lot of reinforcing to fix. And I think that's really the key message for the episode. I don't think we should ever settle for less in trading and just execute on a strategy and see how it goes. Yeah, and I think that sort of data proven strategy or proven model, I think is really important. And honestly, I'm guilty of not finishing my actual data collection. That's very true. Mm-hmm. I'm lazy. I'm undisciplined. I'm not perfect. But again, I feel like that sort of mentality, you should be trading as if you have a strategy. Having a strategy, you have to have set take profits, set stop losses, set entries. Not no emotional FOMO in, let the market take control of you, and just you being swooped up by the market. And I think that's the best. I think that's a bit more the moral for the episode. You can't let the market fuck you up and sweep you up if it's not in your strategy or your model. And if you guys want to trade some futures, link in bio. I think we're pushing that fucking link like it's our life, but go ahead. We also have socials in the bios if you guys want to check out our reels, highlights of these episodes, etc. And you can also see the YouTube, the play bar if you guys want to skip back or forward into certain parts of the episode. We have it all there in the description. And show some love, man. We love you guys. We appreciate you guys for watching and supporting. And even if you don't drop a like, we like you. But again, we'll like you 10 times more if you drop a like, if you comment, if you subscribe. We'll like you 10 times more. And if you drop a comment, we'll like your comment. How about that? That's the deal of the day. That's the deal of the episode. Drop a comment, we'll like your comment back. And we appreciate you guys. All right, we'll talk to you guys in the next episode. And we got a lot of behind the scenes stuff coming. So we'll keep you guys up to date. And yeah, we appreciate you guys.
Absolutely. See you
All
guys
right.
in the next one.
See you guys. Bye bye.
Wee.